Hello, good evening, everybody. And thanks for tuning tonight for the Singapore Tuesday session. All right. Before we start, can we do a quick sound check? If you can hear me, can you type it in the comment section? Put it at one. Let me know that you can hear me loud and clear. Okay. And thank you for no, I'm still waiting. Anyone? All right, please help us to share out or ask people to tune in for our session for tonight. So that we have more, more people can learn about the Singapore market. So in tonight's session, will be me only sharing about investing in Singapore stock market. Probably using our proprietary software that available for free. How to spot multi-baggers and rising stars in Singapore stock market. All right. A lot of questions that investors always ask. Where should I invest? Or where should I diversify? Should I diversify into other market like Singapore market? Probably the answer probably yes. You can try out Singapore market because in different kind of market you will have more varieties of companies. Also, probably you can find some hidden gems in Singapore market. So in tonight's session, we will deep dive into like two companies. So, but before we go into that, right? Probably just to going back backward once. Right. Actually during last year we did a studies on how what are the commonalities of these multi-bagger stocks. In uh, what they achieve and are there any sign and potential commonalities that all these company can have, and probably can we stop them earlier or and generate a very substantial return to investors. So without further ado, let us start the session for tonight. All right. In tonight's sessions, I have to put some disclaimer. We do not have any financial advice, or all our information shared here are purely for educational purposes only. So, so if you need any financial advice, please consult your financial advisor. Right. Okay. And tonight, right, we will use our proprietary software, which is sg.agritracker.com, and you can log into the website, and the website are actually totally free of charge. All right, and it consists of a lot of financial data for all these Singapore stock, all the company listed in Singapore Stock Exchange, including real estate investment trust REITs. So actually, we also have some AIs, right? That we put some formulas together. So we categorize them into few categories. As you can see on the screen, we have a few categories that we filter out using a fundamentals criteria, like rising stars that actually has continuously grown their net profit over the last 3 and 5 years, and implying an improved company or industry performance. And dividend kings, all right, there are other features like what are the companies that are consistently paying up good dividends, and also they have a sustainability operating cash flow for every last 5 years, right? And there are other like defenders that a company which have a wide economy mode, right? By a wide economy mode, which means they are the company are likely to do well in the long run, and with they can fence off their competitor, right? And they keep their profitability in the long run. And they are also cash holders. Probably there's a saying that cash is king, right? So what are the companies that actually have their strong war chest in their company balance sheet. So probably they can do better during economic recession. So yeah, they also a filter that with continuous hero. Uh, Continuous hero, their company are actually posting uninterrupted profits, dividend, and operating cash flow for the 10 years or more, right? But tonight's part, we're going to share on the rising star, or more people are known as the multi baggers over the years, right? Or probably they have the potential to become uh, multi baggers going forward, right? Okay, in terms of the technical trading parts, right, in our software, we also available all this data the in the technical charting part. So we have tradable stock, a rock bottom. So are the stock that hitting below this average volume, and right, and also what are the companies that actually now is in the uptrend support opportunities. So you all can check out all these ideas in our website. So if you want to find a shortcut to shortlist what kind of stock that are good for trading, I think this is it. Okay, so now let's talk about these rising stars and multi-baggers, right? Um, Actually, multi-baggers is a concept that may talk about by Peter Lynch. So and these multi-baggers, right, are the companies that can deliver, they give you that double your stock return. We call it two baggers, or 10 times of your initial investment. We call it 10 baggers. So, uh, so what are the major determinant factor or major driver of the rise in company share price, right? Actually, as a value investor, we know that actually the rise in company share price is actually driven by the growth in company net profit. Agree? So how we can actually find them? If you go to the Singapore Stock Exchange website, right? Probably you need to spend a lot of time by looking at each of the company, their financial performance over the years. So it will take you consume a lot of times. So using our filters, right, you can easily get all this data in your fingertips by what are the companies that actually consistently giving deliver better and better result over the past 3 or 5 years. So yeah. So basically in our ET, right, we have a 40 years of history. So we collect a lot of data. This enable us to help you to find out what are the germs in this stock exchange by the blink of an eye. Okay. So probably an introduction on what we will learn tonight. I will talk about what is a beggars, and what are the commonalities of a multi beggars. And third, what the skill and probably a strategy you need to look for the next multi-bagger, and actually where you can find them. Right. Okay, what is a multi-bagger? All right. A stock that doubles its price is called what we call a two baggers, and while its price grow for 10 times, it will be a call a 10 baggers. So thus the multi baggers are stock that whose price has risen multiple times their initial investment value. Right. If you are invested at 100,000 ringgit, probably become a 200,000 is a two baggers, right? And the next, in terms of the this one is the investment cycle. Uh, in ET, right, we are education company, so we will cover in our ET investment classes that give you some basis of investment. So if you haven't joined our classes, I actually strongly recommend to join our classes. Uh, right. So in terms of the multi baggers that already happened, right? They're actually mostly in the investment grade stock. So all these investment grade stock, right? They are actually consistently paying you very high dividend, consistently making profit and operating cash flow over the last 10 years. And for those multi-baggers, like probably you are looking more at here, the startup and the emerging part. So the potential multi-baggers that are probably their numbers are not as same as the investment grade stock, like they are probably have lower uh lower dividends income, lower dividend yield because they have to consistently keep some cash in the company and to grow the business, right? So yeah, and definitely we will try to as an investor, right, we will focus on emerging and startup. So probably if you are more risk averse, right, you can look at the investment grade stock, which is potentially have a lower risk. And we try to avoid sunset stock and turnaround stock because they are involving a higher risk profile. So since tonight our topic is talking about the XUX Singapore Stock Exchange market, right? A lot of investor will ask and they say, I want to have high return and probably there needs more vibrant market, and because they have perception that markets are never moving so for it they are not interested so much in investing in Singapore market, so and they go to other markets, right, like US. But in terms of the financial data wise, right, what we find out actually quite different because the probability that you can spot a multi-baggers or a companies that already become multi-baggers are higher in Singapore stock market compared to others markets, right? If you compare Hong Kong Stock Exchange, in terms of the stocks, right, they are out of 616 stock in Singapore Stock Exchange. They are 6.5% uh became multi-bagger stocks, right? And compared to other stock exchange like the Hong Kong Stock Exchange, they are 3.5%. So in terms of probability, they are you know probably you can do better, and if you pick the right stock and hold it for long enough, probably you can get higher chance to spot multi-baggers company. And this study actually conduct from August of 2011 to August 2021. And all these studies are actually the stock that are less than 10 years are not calculated, right? So probably we can look at the what are the years to achieve a 10 megas, a very good kind of return that every investor want to have a 10 megas in their portfolio. So in terms of the year to performance to achieve a 10 mega stock, right? If a company that can deliver a consistently 15% uh appreciation in terms of share price, you also need 16 years to achieve become a 10 megas. So if a company can constantly growing their business at 25%, probably you only need 10 years to let that stock to become a 10 megas. So it's all depends on your investment horizon. Um, but actually not many investors can actually tune out from the market for 10 years, and because every day, right, as an investor, a lot of investors facing a problem is that every day we bombarded with so much information, and you always have the itchy finger to try to do something to the portfolio. So to make the performance worse off if you found out in the long term, right? um and okay, so now look at what are the commonalities that all these multi-baggers company have in all right, in the summary, right? There are some commonalities. First of all, probably the companies that became multi-baggers, they have a communities that they have growing total addressable market, right? So total addressable market is a very important metric that a business can use to assess the size of the market they are entering and to estimate that potential revenue that can be generated for that market, right? So you will need a company that their business is in the industry that where the demand is consistently growing and more people are willing to pay for their products, right? For maybe for example, previously we're talking about smartphone market before the era of the during the computer era, as now you are seeing that people are cannot live with their hand smartphone. So no, that's a market is actually consistently growing, and the total number of potential customer and users for product and services are also growing. Uh, no, you can actually try to uh, spot what are the industry that have consistently growing total addressable market, right? We also have another session, like another live session that we shared before, is talk about the unstoppable trend. That basically the unstoppable trend is the industry where you are in the industry where the sail with the wind behind you, right? You are making you probably by investing all these unsolvable trend industry and companies that then you can do better in the long run. So what are the second one is actually the economic modes. So probably you will need to have some company that actually have a very wide economic mode. Um, so because a success company attract competition, right? So economic mode is to keep your competitors from attacking your company profit. So that's the basic concept of the economic mode, right? And the third one is the growth in revenue. Basically, point number 3 to number 6 actually in both have the community in growth in revenue, growth in net profit, and growth in their operating cash flow. These three are very important metrics for a company to become a multi-baggers. So, and also the growing in terms of PE ratio. The PE ratio is the price multiple that the investor are willing to pay for the company. So in terms of the PE ratio, probably when a company was trading at 10 times PE, and now because of the market have more interest in the prospect of the company, right? Probably they were willing to pay 20 times PE, which means in terms of the price, also you can grow it by a double of your share price, right? And also this point number 7 is the expanding profit margin. So if your company have a wide economic growth and they can grow their profit margin enough, and probably the company actually can making more and more profit from their business and to deliver that kind of the result. And the last point for communities for multi-baggers is they have the smaller market capitalization. So so in terms of market capitalization is you can think of the size of the company that they are smaller in size in the initial phase, right? So you probably the smaller company can grow faster compared to those very big company that's actually in billions kind of revenue, right? Yeah. The next point is actually you can still spot them 3 years later. What I mean by spotting a multi-baggers 3 years later, because as we shared before, right? If a 10 baggers in order for a 10 baggers to become a 10 baggers, right? Even the company growing in terms of share price for 25%, it would took 10 years, for that stock to become a 10 baggers. So even you are investing into the company 3 years after they have the sign to deliver all kind of financial performance and result, right? You can still make a lot of money from the rest of 7 years, right? Can still have enjoyed quite a handsome profit from that. Okay, what are the skill and strategy you needed to observe, right? Probably observation is a very important skill, and the common sense to observe what are the total addressable market for a company that actually in a growing total addressable market. So probably you also need some understand their qualitative aspect of the business to in turn to determine what are the source of their economy mode, whether they having a competitive edge in terms of their cost advantage, or they can produce the product cheaper compared to the competitor, or they are better in terms of their product qualities. What are the reasons behind that in terms of their better product qualities? So are they a monopoly business so that the competitor cannot enter into their industry? Yeah. And for the point number 3 to number 5, right? They are actually you need to understand some of the accounting stuff, which means you definitely involved in some numbers. You have to know what is the revenue, how they derive their net profit, and what is their operating cash flow coming from. So this one you need some a basic understanding of accounting. So what Warren Buffett call it a language of business. Okay. Now probably we will use our Equity Tracker website that to find some multi-baggers and the rising star in Singapore Stock Exchange, right? Okay. Let me share my screen. Okay, I hope you guys can see my screen here. We are at the website of s3.agritracker.com, and this is the website that actually we offer for publics that absolutely for free, and we basically you can read through all these articles we have posted previously. There are so many valuable stuff that we try to educating investor in terms to uh, you know invest in stock in Singapore. All right. But for the session for tonight, right, we will try to explore some stocks using our stock selector. And basically, this stock selector actually have a full coverage of all Singapore stocks. And as I mentioned, it is all powered by our advanced algorithms. And you do not need to create your user login, and there's no login requires, right? And the first session you can see there's the trading ideas, which is more on the technical charting part. So you can click on it and to explore what are the technical things, technical stock that has. And the second one actually the investing parts. Probably we'll click on the rising stars. Okay, so the rising star tables actually we sorted out. The last update actually is on today, 13th of June. So we updated daily to have, is a very good information that we updated daily to have you let you have the updated information every day. But all these financial data are sorted by 3 years and 5 years. So in terms of the 3 years rising star, right, which means the company delivered a continuously growing in their net profit for the 3 consecutive years. So let's take a look at the example. For example, there's the first company, Ascension Partners Limited, right? They are in the sector of environmental services and equipment business, and their market cap is about 25 million of Singapore dollar. So why they are ranking the first in terms of the rising star for the last 3 years, right? is actually, you can see their previous 2 years net profit are 23,000, and they are growing net profit from 23,000 to 1.8 million. And the latest year on net profit, actually they growing in from 1.8 to 7.9 million Sing dollars. So there's a 34,000% in growth in their net profit. So in terms of the growing of their net profit, because this is a very small base, I would say. So they rank at 34,000. So there's a plenty of lists here. I think you can click on the show number of row here. If I choose 200 row together, we have sorted out well, there's a lot. 151 companies that actually delivered higher and higher result for the past 3 years. So actually, there's a catch here, because in the year 2020, we know that there's a pandemic area where lockdown and business cannot run, right? So a lot of company actually generating losses, and they slowly get out from the losses and get improving result for the past 3 years. Because the latest year we are looking at is probably at the year 2022. So the previous year is 2021, and previous 2 years was 2020. So if you want to further try to avoid that bias, right, because of the COVID, right, we can use a 5 years period. So you click over the last 5 years, right, you can see actually over the last 5 years is we are comparing the numbers of year 2018 compared to year 2022. So the result here is actually the previous 4 years result is the 2018 result, and compare against year 2022. So in terms of the total companies, there are only 12 companies, which means the company in the list here are basically delivering result and can continue to grow their net profit even during the pandemic period, right? This one can be quite interesting to look at. We have filtered out 12 companies here. Probably you can spend some times in looking into all these companies. There are Aegis System Holdings Berhad is a IT service and consulting business, where they have a 257 million in terms of their market cap, right? There are companies in the heavy machineries and vehicles, and there are also company in real estate development and operation. And the others company we have here is actually auto, semicon, healthcare, real estate. But in terms of the number 8 and number 9 players, right, they are apparel and accessory retailers. These two companies, one of them is called the Hourglass Limited, all right? And the second one, actually rank number 9, is Cortina Holdings Limited. Basically, we did share these two companies before in 2021, all right? In year 2021, we actually host this Singapore Stock Exchange session that share these two companies. So actually tonight, I also will share some of the highlights for these two companies. Why? Basically, these two companies are actually a retailer that doing sell as a distributor of luxury watch, right? Distributor of luxury watch like Rolex, your Richard Mille, Patek Philippe, right? Right, I will share this too. Okay, this is the presentation slide that the snapshot of what we share in 2nd of March 2021. During that time, right, the company, the Hourglass, in terms of share price, they are 88 cents, and their market cap was about 620 million, right? About 1.9 billion of 1.9 billion ringgits, right? During that time, ATX stands at 620 million Sing dollar. What in terms of their current market capitalization is almost 1.3 billion. Actually, the company doubled for ATX to $1.97. It's already doubled from since what we share. And in terms of the this is where we share. Where we share is a March 2021, and now in 2023, within less than about 2 years, 2 year times, the company actually doubled. It is actually quite commendable for this kind of company because they're retail business, right? Even though we know that actually there's a economic headwind and slowdown in recession around the world. People are talking about recession, but the company can continue to deliver even during this kind of period. And the next company is the Cortina. Cortina, during that time, their share price was to $2.21, and the market cap about 365 million. So after we shared, right, this company also growth in terms of share price from the almost $2 to about also doubles into $4. So it is indeed already two beggars. So the question is, can these two companies continue to deliver fantastic result going forward and become the potential three beggars or five beggars or even 10 beggars, right? Let's look at the financials, right? Even the share price has doubled. In terms of valuation, are they now become more expensive compared to year 2021? I would say, give you a short answer. Answer is no. They are evenly. They are not expensive in terms of the valuation. So let's look at the some of the background of the watch industry, right? And you know that all the watches are basically have the same function, right? They can tell times. So even all our smartphone can actually tell times. But the first ever watch that was a stone that invented by Titian is a sundial in 1500 before century BC, right? And now after that, it's actually the submariners and even the watches have been in the space and moon, right? And if you go to in the watch shop or even any retail shop, right, you can see the clocks are always pointing at the happy time, right? 10:10. So there's a trick. So some watches, right? Even normal people call it watch, right? But rich people call it timepiece, right? For a timepiece that generally doesn't sell for more than 30,000 US dollar. This Rolex Daytona Paul Newman actually auctioned and sold for 17.8 million in 2017. This is actually you know very cannot believe it. It's a watch, but people are branding it as a jewelry, all right. So a luxury product, and people are willing to pay for it. And even the COVID pandemic period, right? Although a lot of people suffer, but you can see there's still a very long queue in front of a luxury shop like LV or Rolex. Okay, what we mentioned by luxury watch, right, is that any price range from 3,000 Swiss francs we consider as the luxury watches. And also there's a category called upscale watches. is about 500 to 3,000 Swiss franc, right? And even after all these luxury watches, they are also the disruptionist smartwatches, Apple Watch, and all these wearable devices, right? But I would say that actually they are all this in a very different market and capturing different consumers. They are servicing different type of consumers, and the watch collectors, right? They are not buying by only having one watches, right? So for the collectors, can have multiple watches. Even they have a one Rolex, there are nothing to stop them for owning another additional five Rolex or other brands of watches like Patek Philippe, right? So this slide actually give you some ideas on what are the top luxury brands in 2019. So there's a Swatch Group, right? In terms of the size, they are actually making the retail market share of almost one third lah, 27.5% in year 2019, and the Rolex is having another one fourth, right? One fourth or 24% of all Swiss watches that capture all the market share. Rolex is basically everyone know about them. There are other players, Richemont, LVMH, Patek Philippe. There's a lot of names that I do not know how to pronounce. But there are also some watches coming from the Japanese market, the quartz watches, like Seiko, Citizen, Casio, right? Even though it's very popular brand, but there's only accounted for maybe 10%, and yet to manage to sweep the world by surprise in 2020. Yeah, right. Only 10% of the market shares coming from these quartz watch, right? Seiko, Citizen, and Casio. So the top Swiss made luxury brand in 2019. Every year, right, Switzerland produce about 30 billion watches and export 95% and to the world. So Switzerland definitely is a country that specialize in producing luxury watch. That's a representation of 50% of global watch production, and that amount alone actually is a 2.5% of world GDP production in 2018. It's a very substantial amount, right? So in terms of turnover wise, right, Rolex was still the top one. They generated 5.2 billion of sales, right? In terms of turnover, 5.2 billion Swiss franc. That's about 20 to 25 billion ringgit. Okay, you may think that uh, the watches competitor are actually the smartwatch and the other quartz kind of watch, but actually this is not, right. The second-hand watch actually is the closest competitor to the brand new luxury watch, because the luxury watch, right, why it become luxury is because the manufacturers continuously control the output and the amount of the new watches. They control it very well. So there's a long waiting list that if you want to buy a brand new Rolex watches, right, probably you have to wait 3 years. So uh, in terms of the secondary market, right, the price in the secondary market can easily twice as high or 3 times higher than the brand new watches. So in terms of the market size, right, there's the second-hand watches estimated at worth about 16 billion euro a year, right? This is very huge, and this figure can be compared with a cumulative of total of less than 10 billion French of Swiss watch export between January and August 2020, right? In terms of market size, the data was until September of 2020, right? So there's a 21 billion of euro worth of second-hand luxury market for this watches, right? 75% of this actually coming from watches, and 25% is the jewelry. So yeah, in terms of the market wise, uh, definitely the offline sales channel are still the preferential models for all these luxury second-hand pre-owned luxury watches. So there's also 35% coming from online sales channels, and also there's 10% coming from auction houses. In terms of regions wise, Europe is still a very big market for these pre-owned luxury watches, about 50% of their market, and followed by US and the China and the rest of the world. Okay, let's look at the company listed in Singapore Stock Exchange. That the company, the first case study for tonight is actually the Hourglass Limited. Okay, the Hourglass Limited was actually financial year ended at 31st March of, right? So they are, as I mentioned, they are the distributor in Singapore market, and they are the largest distributor of luxury watch in Singapore, and I would say one of the largest in the Asia Pacific region. So in terms of share price performance, there's the share price, they are now currently trading at $2, and the market cap 1.4 billion, right? 1.4 billion in terms of Sing dollars, and about 4.8 billion Malaysian ringgit. That's uh, I would say for a retailer that have this size, that actually is not easy. They're consistently growing throughout the years. In terms of revenue wise, right, this retailer are actually uh, making almost 1 billion, more than 1 billion Sing dollar sales, or about 3.5 billion of ringgit sales a year in financial year 2022. Right, in terms of net profit, they are making 154 million, or about 533 million ringgit in terms of the net profit alone. But one very important thing is that if you are looking at their operating cash flow, right, they are consistently making higher operating cash flow compared to their net profits. About 221 million of operating cash flow. So about 20% of their total revenue, right? This is very, very good figures. And in terms of dividend yield, they are 5 years average dividend yield for the company is 4%. Okay, let's look at some of the financial data. So for the Hourglass, right, uh, if you observe the trend, because they are distributor, so in terms of the top line figures, definitely there will be a very high figures in terms of top line. But because they are purchased the luxury watch direct deal from Rolex, and then they sell it, right, they're making about 30% gross profit margin. But in terms of the 30% of their gross profit margin, they can make a 15% of net profit margin. That's a very good figures, right? In terms of the latest financial year, they are having 154 million of net profit, and they're backed by very strong operating cash flow. They do not have any single years that making losses, right? So in terms of the operating cash flow, they are consistently growing from 37 million of operating cash flow a year in 2015 to about 221 million Sing dollar per year. Yeah, that's the thing. In terms of the capex, investing activities, they are actually, I would say, they are not, they are no need to invest a lot, because they are a retailer, which they basically just lease or rent the shop they own. They do not own the shop, they just lease it. So there's not much capex involved, but the only capex they have to spend is to the renovation, right, to make their outlet to have that luxury feel, because this kind of business also is a service business, right? You as a customer walking into the store, you have to feel have a very good experience and luxurious experience, and they, because they are continuous paying dividend, that's why they are seeing negative financing activities. But this is a good thing for investor. In terms of the some of the statistic, right? Their flagship store is this Mount mentioned in Orchard Road, their flagship store, and they are also authorized reseller for Patek Philippe and Rolex, official retailer for Rolex. So they have strategically positioned into 12 key cities. So they have it in Singapore, they also in Malaysia, and even Vietnam, Japan, Hong Kong, etc. So they have a total of 45 boutiques outlet. Total of 45 outlet. If you consider uh, that kind of result, right? For 45 outlet, they can making 1 billion sales and a profit of 154 million Sing dollar. This is considered a very, very good figures, right? Uh, Basically, the business as it started in 1940s is across a three generation. Now is a company run by Michael Tay, and the founder was Dr. Henry Tay. They own the heritage of more than 50 brands. They distribute like a Rolex, Patek Philippe, Audemars Piguet, Tudor, Hublot, and many, many more. In terms of their market, right? They have Southeast Asia is their largest market. In Singapore, they have 19 outlets, and followed by Malaysia, Thailand 11, Vietnam 5 outlets, and Australia or 7 outlets, and New Zealand 2 outlets, right? Boutique store. So all these outlets, right, generating about 94% of their sales coming from Southeast Asia and Oceania, about 981 million. And the rest of the 6% of the sales, or 112 million, are actually coming from Northeast Asia, right? So 2 in Hong Kong and 1 in Japan. Okay, the case study for the second company is the Cortina. They also in the same watch business. They are a distributor for Rolex also, Patek Philippe. So in terms of the size of the company, right? Just now, the Hourglass worth about 1 point something billion, and for the Cortina, they are smaller in terms of their market capitalization. They are now trading at about 606 million Sing dollars, right? In terms of market size, is about 2 billion ringgit. So in terms of their revenue, right, they are making about 700 million revenue and a net profit of 368 million, which is a higher profit margin for Cortina. And their annual operating cash flow is about 158 million, also very good figures. But in terms of the dividend yields, right, they are paying out offer a dividend yield of 1.1% for the average of last 5 years. All right. In terms of financial figures, they are also consistently making profit throughout the past 10 years. So even during the COVID-19 pandemic, right, the business actually continue to grow, right? Basically, this year is the COVID year because their financial year ends is on the March. So the full impact of the COVID actually reflected in financial year 2021. So during that year, they can observe there's a drop in their top line, but in terms of their net profit, why they are continue to showing result and growth in their net profits. So for 10 years wise, their net profit actually growing from 21 million to 68 million, reaching 70 million. So in terms of operating cash flow, beside year 2013 of negative 12 million, they are actually growing from 8.8 million a year of operating cash flow to about 158 million. All right. Okay, let's look at some of the comparison between these two luxury watch distributor, and probably who can bring in the next a billion, or who will become the next multi-bagger sooner. So in terms of a price variation, this is a financial data wise. In terms of the PE, both companies are actually trading at the same price to earning ratio, which is 8 times to their earnings, right? So they are both are uh, considerable same. So, but in terms of the dividend yield that offer to the investor, the Hourglass have offered a 3.7% of dividend yield, and compared to Cortina of 0.5%. And in terms of the growing in their earning per share, right? For past 5 years, they are both growing about 27 to 29%. So it is I would say this kind of growth rate for a retailer actually are really commendable and decent. I have to kudos to their management. So some of the business direction, right? Cortina actually during the past few years they are aiming for merger acquisition. So there's a high growth in expansion mode and via acquisition and expanding their watch portfolio. So the Hourglass business direction are more on the traditional brick and mortar and delivering the better offline experience, right? This is their business direction. So yeah, I would say both are the company are actually are worth to trigger a further study. I'm just actually trying to bringing these two company up for you guys to have an idea, so you guys can do more research on these two company. If you guys know more detail about the company, feel free to comment on the comment below, so that we can have some sharing on the information, right? So this will be my last previous slide for tonight. If you guys have any question, very welcome to answer any question from you guys. Let's see if there's any question. Okay, I received a question from Sean from YouTube. There's a question for any thoughts on Riverstone. All right. Okay. Talking about Riverstone, uh, is in the glove company lah. So basically, okay, let me share my screen. Okay, as you can see, this is the one of the largest glove manufacturers in Malaysia. So, but they listed in Singapore, and in terms of the share price performance, they actually all the glove manufacturers share the same fate lah. So from the peak of 230 to about 60 cents. As can see that in terms of their financial performances, in terms of quarterlies, right? They recently, I think, in terms of the financial performance, they are uh, definitely coming from the peak of 1 billion to 42 million. But in what I heard from the industry player and all these industry manufacturers, right? They are they are seeing a stabilize in terms of the average selling price of the glove. So probably people are suggesting that actually the worst is over for the glove industry, because uh the big Chinese glove manufacturer, right? The China manufacturer are also suffering losses. So when they're suffering losses, right, they will start to revise upward in terms of selling prices, because last time Chinese glove manufacturer are actually sell their glove even cheaper than our Malaysian manufacturer. That's uh put the intense competition to our local players. So even they are suffering losses. So now Chinese players are revising upward in terms of their average selling price, and our our Malaysians or even the Riverstone players are actually having some buffer in terms of their uh, revenue, to because all the costs have went up so much in Malaysia. They have in Malaysia, there's a rising on their energy costs in terms of their gas prices and the all these minimum wages, right? Uh, so what I can say is that pending a market consolidation in the local landscape, probably all these big guy will acquire the smaller guys when all the smaller guys cannot continue to survive, right? It will take time for the market consolidation. So probably it will take some times, right? But definitely all these glove player cannot recover to the pandemic level in the near future because of the emerging of the uh, new supply for coming from China. But in the long run, there's still demand for glove. That's for sure. So yeah, that's my thought on the glove sector and the Riverstone. Right. I so far only one question. There's the others comment. All right. Hope so. Hope so. Most welcome, Sean. So all right. Is there any other questions? Right. If there's none, then we'll call it a day. So thank you for tuning tonight, and we'll see you soon. Right. And good night.